Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of Proprietary Price, Pattern, and Time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, more profits are flowing into In the Money Stocks members today as the markets continue to dip lower. This is exactly coinciding with our cycle date that hit again in the last week. And sure enough, since that cycle hit, we basically put in our pivot top on the 2nd of April and have thus fallen dramatically. And again, from that high pivot at 157.20, to the low of today, we're talking about a nice 3-point fall in basically 4 days. I mean, that's a good 2.5%, 2% drop in the markets. Now, overall, the buy the dip mentality is still going to be alive and well. However, you should see this as the rounded top portion that has bounces, but generally doesn't make its way too far back up this slope, if you will call it that. So again, you have these bounces here. Just like yesterday, you had a little bit of a bounce, but it should be met with more selling as the distribution from financial institutions continue. All right, and again, you can see that on this side of the rounded top, and this is a great rounded top here, you can see the market had dips, but every dip was met with more buying, so the markets went higher and made higher highs. Now we're on the other side of the rounded top, where the selling is met with buying, but the buying is only minimal at this point as the distribution, as I said, from institutions continues. Remember, distribution is where the institutions are selling more. All right, they're unloading into the retail average buyer, that's coming into this market. So there's a lot of retail average investors that have missed the rally, and they're now getting in, and they're the ones that are buying the shares from the institutions. Okay, generally you don't want to be one of those people. Those are the people that lose. All right, for members here at InTheMoneyStocks.com, it was a spectacular week. Valero hit its target, 12.5 to 13% move right there on Valero off of the highs here. We caught this full move down. I covered the position with members right at this low pivot right down here. EMC was a short that we took up here, right in this area. We hit target today for about 10% profit on EMC. And other shorts that I'm still in, that I'm riding, this one right here, IBM. All right, I'm short IBM, basically $4 in the money. All right, another short that I'm in right now, Amazon. This is a beauty, folks. This is an absolute beauty. I shorted this at 265.5. It's trading at 254.5. That's $11 in the money on this play. And let's see what else I have out there in my list as I scan my list. We also have KR. KR is basically flat to slightly in the money here as it's looking to break that 20 MA. And then the best, leaving the best for last, our long play on SDS is now beautifully in the money, well over $1. And the SDS is the 2x short ETF on the S&P 500. So you're basically going short 2 times on the S&P when you go long the SDS. So really, again, it's just been a great week as the cycle date given by my partner, Nick Santiago. He nails it again. We nailed a minor cycle date about a month ago, and we've basically nailed every major and minor pivot in the markets and move since the inception of our company back in 2007. By the way, our first call when we started our company was the financial collapse and the real estate collapse. And that was really what got us that first claim to fame that took us all the way through. And then we've nailed every call basically since. So again, folks, bottom line is, we're just going to continue to trade the markets. And the beauty of what we are here is we're swing traders. So we're in and out of the markets. We're long, we're short. We're holding things for, let's say, 2 weeks and then going the opposite direction for a bounce or a pullback and then doing it again. And by that way, we can literally maximize profits, coming up with something in the range of, in my opinion, I'm able to spit out at least 100% return per year in my swing trade portfolio. All right, you go to an institution and ask them if they can do that type of return. Most institutions and hedge funds had negative years last year. All right, even this year they're struggling. And we're already off to a running start with our 80 to 90% success rate. And that's what the truth, folks, behind it. All right, our success rate on our track record literally is 80 to 90%. So that means 8 out of every 10, 9 out of every 10 trades are profitable trades. It's awesome stuff. All right, daily chart right here. Beautiful fall. A couple days ago, you got your small bounce yesterday and then a continued down move today. Ultimately, we will eventually come down to the 50 MA, and there's a gap fill right here. That should be really your first target of this pullback. All right, so again, even though we're bouncing here on a little bit on the intraday period, I still think there's more downside to go over the next week period down to this 50 MA gap fill, which is right around the 152.90, 153 level. It's only about a $1.60 lower than where we currently are, so that should be where we head. All right, dollar today, the UUP is falling. I gave a negative bias yesterday to our members on the dollar based off the gap up and reversal yesterday. Clear wide bar range tells us further downside in the dollar, and the dollar is falling. Great call there. I went into, after being negative on gold, I went into a positive bias yesterday after it hit short-term target. Sure enough, you're getting a huge bounce in gold today, and members were advised to take profits on this short, beautiful bear flag to target right here, and they took their shares off the table on the short side, covered it, and they, again, I told them yesterday, look for a bounce short term in silver, and silver's bouncing. So these are just a plethora of calls that we've made, and again, are available to anyone who's a member here at InTheMoneyStocks.com. The Research Center is what you want to focus on. The Research Center is geared towards swing traders and investors. If you happen to be a day trader or if you want to start day trading, then the Intraday Stock Chat is for you. USO, beautiful, little bit of downside today, but again, the levels that have been called out on the USO are spectacular here. Take a look at this. All right, this is where I said to go long. All right, this is where I said to go short, and look at the moves off of that. And again, gap fill right here, extended move right into gap fill, no brainer long. Here, look at the trend line. Connect the trend line, go short. It doesn't even take a rocket scientist to do this. I mean, honestly, if you're not doing this, you're probably missing out on the easiest money of your whole entire life. You know, there's so many people that work so hard, and you know, if you're not at least, you know, if you have investable income and you're not doing this, it boggles my mind. If you're kind of just investing blindsided, you know, blindfolded, crazy in my opinion. And again, we'll teach you every method we have. I have a webinar coming up a week from tomorrow where I'll be teaching proprietary methodology, proprietary strategies that basically will turn you into a best trader. You know, along with Nick's webinar methodology revealed, that you take the two webinars combined, you'll be better than any hedge fund trader out there. Any hedge fund trader. All right, guys. So take a look at Apple today, Apple week on the day. The key support on Apple is going to be the double bottom right here. All right, another great call on Apple, folks. Check this out. Here was my long call. It triggered in the Research Center as a long, right here around the 420 level. Once we got up here, advisement was to take half off. And again, once we closed below the 50, was take the rest off for a good profit. And then I went into a negative bias. Sure enough, we're back down to the lows. I actually think my bias is still negative. Even though I was positive, it's now back to the negative side with a move below 400 looking for. All right, that's what we're looking for right now. All right, so that's what we have going on there. Google's getting slaughtered today, absolutely annihilated on Google. If we look at the intraday chart, lows of the day here on Google. This is why the Nasdaq's really one of the weaker indexes today. If we go to the daily chart, look at this drop today. Nice river theory here, and you will have a good opportunity to be a buyer on Google, but I'm going to tell you right now, I'm not going to reveal that level. All right, I'm telling you right now, if you want to get this level, I'm going to be going long Google soon. Which level? It's not quite here yet, but it's getting closer. If you want to know, just join the Research Center. I will put it out as a swing trade alert this weekend for Monday's action, just in case it goes down there. Talked about Amazon, guys. Awesome trade on Amazon here. Phenomenal trade. Looking for a little bit more downside ultimately, but again, this is where I went short right up here with members, and the rest is history. I mean, you can just see the beautiful, beautiful move down on Amazon for profits. JPM is positive, which is good for the market. This is the one small positive in the market out there, that JPM is up on the day, even though it's coming in off its highs. And Goldman Sachs is actually doing pretty well too. Small bullish consolidation into the afternoon session here, only down 25 cents. So actually, I look at the whole market here and I see tons of weakness, but financials are actually strong, which is actually not a bad thing for the markets. Overall, at short term, that's not a bad thing. Might mean we get a bounce on Monday. Very, very possible. All right, now, the reasoning for this drop today is obviously the cycle date, which my partner nailed perfectly. And again, that just enables us to really load the boat, as I did on shorts going into that cycle. But if you talk to the media today, they're going to tell you is the jobs number this morning, which was extremely weak. The only thing about the jobs number is the weaker the jobs number, the more likely the Fed continues to print money. So, I mean, you have to look at it in that way, too. It's not a total negative, which is probably why we bounced off these lows. All right. And, we'll go from there. But bottom line, that's what the media is going to talk about. You'll hear it on the news all weekend long. Be interesting if we see a little further downside. Okay. On that note, folks, I'm going to bid you all farewell. Have a great, fantastic weekend. I'll probably give you an update on the weekend in video format here as a free video for you guys. Maybe I'll even give you guys a trade alert out of it as well. But bottom line is, I mean, if you're not splurging and spending $50 a month to get the research center that just gave you probably tens of thousands in profits over the last 1 week period, you're honestly a little crazy. Either that, or if you can't afford $50, you shouldn't even be trading in the market. I mean, it just comes down to that, folks. If you can't afford the $50, then I would just sit on the sidelines because you'll just lose all your money anyway. So, alrighty, guys, come join us here. We'll see you soon. Let's make some more money. I'll be making more money next week. That's for sure. Take care.